Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host Daniel, bringing you the highlights and the happenings from around the world. Last week, global markets delivered varied performances, with U.S. equities continuing their rally, supported by strong economic data and policy developments. Europe showed mixed results amid central bank expectations and inflation concerns, while Asia found support from government measures despite ongoing uncertainties. U.S. equity markets extended their rally, with the S&P 500 climbing 1.06%, the Nasdaq gaining 1.13%, and the Dow Jones advancing 1.39%. The Russell 2000 rose by 1.17%, reaching record highs on the back of small-cap strength and renewed investor optimism. Personal income increased by 0.6% in October, exceeding expectations, while pending home sales jumped 2.0%, the strongest gain in nearly 2 years. In the fixed income market, U.S. Treasury yields fell sharply, with the 10-year yield dropping from 4.42% to 4.18%, reflecting heightened demand for bonds amid geopolitical uncertainties and cautious market sentiment. Political developments contributed to market volatility. President-elect Donald Trump nominated Scott Bessent as Treasury Secretary, signaling a focus on inflation control and economic stability. However, the announcement of new tariffs on imports from Canada, Mexico, and China weighed on the automotive sector, amplifying trade concerns. European equity markets posted modest gains, with the STOXX Europe 600 index rising 0.35%. Among major indices, Germany's DAX delivered a strong performance, gaining 1.57%, buoyed by expectations of potential ECB rate easing. In contrast, France declined 0.27% and Italy fell 0.24%. The UK's FTSE 100 edged higher by 0.224%, supported by gains in consumer staples and energy sectors. Macroeconomic data showed continued challenges. Eurozone inflation rose to 2.3%, though underlying price pressures appeared to ease. In Germany, retail sales declined by 1.5% in October, while unemployment remained stable at 6.1%. European yields remained stable, as markets awaited December's central bank meetings. Anticipation of ECB rate cuts in December supported markets, although uncertainty remains about the size of the potential reduction. In the UK, mortgage approvals reached a 15-month high, but retail confidence weakened, reflecting mixed consumer sentiment. Japanese equities declined slightly, with the Nikkei 225 falling 0.2% and the Topix dropping 0.6%, pressured by the yen's safe haven appeal. The yen appreciated to 151.17 against the US dollar, reflecting increased demand for safe haven currencies amid geopolitical tensions. Macroeconomic data showed mixed signals. The Tokyo area CPI rose to 2.2% in November, exceeding expectations and fueling speculation about a potential BOJ rate hike. The yield on the 10-year Japanese government bond, JGB, dipped slightly to 1.06%, as investors weighed the likelihood of further policy adjustments. Prime Minister Shigeru Ishiba outlined a stimulus plan that included energy subsidies and cash handouts to support rural economies, which helped stabilize market sentiment. Chinese equity markets advanced, with the Shanghai Composite gaining 1.81%, the CSI 300 rising 1.32%, and the Hang Seng Index adding 1.01%. These gains were driven by continued government support measures and improved market sentiment. Economic data showed progress in addressing industrial challenges. Industrial profits declined by 10% in October, a significant improvement from the 27.1% decline in September, reflecting the effectiveness of recent government interventions. The People's Bank of China, PBOC, injected 900 billion RMB into the banking system to ensure liquidity, while leaving lending rates unchanged, signaling a cautious but supportive monetary stance. As we look ahead, several major events are set to shape global market movements this week. The November jobs report, December 6th, will provide insights into the state of the labor market, including employment growth and wage trends, which are key indicators for the Fed's next policy moves. October's retail sales data, December 5th, will offer a view of consumer spending across the Eurozone, reflecting the impact of inflation and broader economic conditions. The revised Q3 GDP reading for Japan will shed light on economic growth momentum, offering insights into the BOJ's potential policy path. The official PMI data will provide clarity on the state of China's manufacturing sector, particularly as government support measures take effect. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.